Hey everybody, welcome back. Happy St. Patrick's Day. It is Tuesday, March 17th, so the markets just wrapped up a little while ago. And here's the headline for today. Oil just crossed back above $100 a barrel, and surprisingly, the stock market went up anyway. The S&P 500 closed up 0.25% at 6,716. The Nasdaq added nearly 0.5%, finishing at 22,479. The Dow gained about 47 points to close at 46,993. And the Russell 2000, the small caps, led the change, up nearly 0.75%. VIX is down almost 5%, meaning fear is dropping even as oil is rising. Now, Brent crude jumped 3% today, back solidly above $100 a barrel. The Iran war is still raging. The Strait of Hormuz is still disrupted. And yet the consumer discretionary sector was the day's best performer, up a full 1%. Expedia and Booking Holdings led the way. Airlines were even better. Delta jumped 6% today. American Airlines was up 3.5%. JetBlue was higher too. Here's the strange thing about this news. It's counterintuitive. You would think that with jet fuel spiking from a war in the Middle East, airlines would be getting destroyed. And for weeks, they were. So what changed? Guidance, forward-looking guidance. At a JP Morgan industry conference today, Delta, American, and JetBlue all raised their first quarter revenue outlooks. Delta CEO Ed Bastian told CNBC that despite absorbing a $400 million fuel cost hit, demand has been, in his words, really great. He said 8 of Delta's top 10 best sales days in history happened this quarter. 5 of those in just the last week of March. Bookings are up 25% year over year. So this is the lesson, folks. Guidance overrides the backward-looking pain. The market doesn't care what the fuel bill was last month. It cares what the revenue picture looks like going forward. And if demand is so strong that it's eating a $400 million headwind and still growing, the market rewards that. On the AI front, NVIDIA's monster GTC announcement from yesterday, Jensen Huang doubling his chip demand forecast from $500 billion to $1 trillion through 2027, is still being digested. The stock's reaction has been muted, and there's a reason. The market is asking, is this a firm revenue forecast or a demand opportunity? That distinction matters when you're pricing a $4.5 trillion company. Now, here's what everyone needs to know heading into tomorrow. The Fed meets. Tomorrow afternoon, Jerome Powell steps to the podium and delivers his March rate decision. A hold is almost certain. The market is pricing in a 99% probability of no change. But that's not the story. The story is the dot plot. Will the Fed remove the one rate cut they still had penciled in for 2026? Because if they do, if the dot plot goes to 0 cuts, that changes the calculus for growth stocks, for bonds, and for the entire rate-sensitive trade. So keep your eyes open tomorrow because this one should definitely move the market. And if you're the type of trader who wants to keep your eyes glued to your screens all day long tomorrow, I anticipate there will be some flash candles, probably to the upside and the downside around 2 p.m. Eastern time tomorrow, right before Powell's speech. So if you're holding any contracts, that could be a really good time to close them out on those huge candles. Just something to keep in mind. So that's it for today. I hope you had some good trades today. Have a good evening. And remember, stay sharp tomorrow. It should be a wild ride. See you tomorrow afternoon.